Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.
Hello and welcome to Nirmal, ladies and gentlemen. I'm Hiral Dadia. We have with us Ashish Puravankara, MD at Puravankara Limited, joining in. Ashish, good afternoon and welcome to the show. As always, a pleasure to have you and speak to you. Clearly, if you go to see with regards to where real estate as a sector goes, there was a period where we were already into some bit of a slowdown if you have to take 2019 as a year into consideration. And with regards to 2020, you had COVID, which creeped in. From the lockdown to now, how would the journey be transitioned according to you?
So I think COVID in general has had a positive and a negative impact. Fortunately, I think the negative impact has been restricted to people falling ill, some loss of life, and the panic. But on the positive side, for business, for industry, for people who used that time during the lockdown to really reflect inwards, to streamline processes, to do a lot of housekeeping, if you may. I think today we believe that we are in a much better position to take advantage of the market and the demand. Also, on the demand side, since the opening up of the lockdown, we've had almost three launches. All three of them have done extremely well. So we've seen demand come back really quickly. Uh, COVID has, sort of reaffirmed the belief in prospective buyers in terms of the value of owning their own home, the sense of security. Interest rates are currently at the lowest. Various governments or various states have also rolled out certain incentives for customers, to take that buying decision in terms of, reduction in stamp duty, etc. I think everything put together, the year, the 9 months has turned out very, very positive. As you're aware, I think last quarter we did 0.91 million square foot of sales, which is the highest that we've ever done without a launch. So
Hmm.
the entire 0.91 million square foot of sales have come from ongoing sustenance projects. For the 9 month period, we have done 2.42 million square foot of sales. So I think by any stretch of imagination, these are fantastic numbers. It only sort of confirms the fact that the demand has come back. People understand the value and the importance of taking that buying decision today. Values are great, interest rates are low.
Hmm.
Net net, I think we are positive. We are going ahead with our launch pipeline, which is almost about 8.66 million square foot
Hmm.
across the two brands of Puravankara and Provident across various cities. In addition to that, we also have 5.5 million square foot of plotted development
Hmm.
projects that we will be launching over the same period.
Right. An interesting trend that you mentioned about the previous quarter as well. I think majority of the developers have seen this kind of growth. Now, do you think, Ashish, this is a pent-up demand, a festive demand, or are you expecting this kind of trend to continue?
I believe that for the next 4 to 5 years, this trend will continue. The reasons are today for various reasons. RERA, I think COVID, there's a huge consolidation that's happened in the industry.
Hmm.
So the number of launches per se, I think, have come down, right? So the supply, I think, will not be the same as it used to be in the past year. There's a huge consolidation that's happening in the industry. So we are seeing we're seeing demand polarized towards the stronger brands. Therefore, you're going to see this kind of sales, you're going to see this kind of performance, at
Hmm.
least for the strong brands, comfortably over the next 4 to 5 years.
Right. So, when you talk about seeing strength with the stronger brands, do you see chances of consolidation happening in the estate space from here on, where probably we could see buyouts of, smaller players by larger players or anything of that sorts?
I, I don't know about buyouts at a company level
Hmm.
in the true sense of M&A, but definitely there is consolidation happening. We're seeing, micro market players. So real estate is extremely fragmented. You have very few players who play the entire city game or a regional game or a national game, right? But you have in various micro markets within a city, you have localized strong brands.
Mm,
Due to consolidation and for various other reasons, I think somewhere the belief and understanding is that they do not want to continue being developers. They understand that their strength lies in acquiring land, consolidating land, right? So we are
right.
seeing a lot of offers that we are getting, from developers where they're either offering lands or they're offering us sanctioned projects to us. As an organization, we are focused on technology at the construction front. We have built very strong sort of expertise in digital marketing,
Mm,
also on the technology, right? So with those trends, they believe that we are probably better placed to monetize that project and land
mm.
than themselves.
Right. So are we trying to say that if you have to talk about, say, more of joint developments, joint ventures, or even management agreements that could be happening between small developers and established players?
Absolutely. So if you see, I think over the last 2.5 years, almost 60% of the projects that we've secured, right, joint development mainly, are from existing developers.
Right. So with this, what's the kind of advantage to the established players sit on the back of these kind of, arrangements?
So, you have to leverage the strong brand that you've built, in our
Mm,
case, over the last 45, 46 years. And the reason we have that brand is our deep understanding of the market, of the customer, deep sort of, the technology play, having strong processes and systems which help us turn around projects, accelerate sales, deliver these projects on time, right? So you got to take advantage of that, and that is what I think some developers feel, that they may not have that expertise
mm,
in terms of launching a project or gaining that kind of velocity. Digital marketing per se, a lot of people have not, though it's something so logical in today's time. A lot of people have not yet explored that avenue, right? We've been doing it for the last 5 years. We were
mm,
the first guys to have a complete online digital launch platform. So the 4th of May, when the lockdown opened up, right? 11th of May, we had our first launch, uh,
mm,
completely digital. So we had a online presentation to prospective buyers. From there, they were transported to the website where they could see a live availability chart, choose their unit. Then they were transferred to a payment gateway. Within 3 minutes, they had to put in their debit card banking details and make that down payment. If they didn't complete that process in three minutes, that unit would again become available, quite similar to you booking a movie theater seat.
mm.
This is something that we created 8 months before COVID, right?
Wow.
So it's something that we were already working on.
Mm,
So the minute we got into that lockdown, we said, okay, this is a great time to sort of roll this out. And 11th of May we did it, and hugely successful. We sold 75% of the project during the launch.
mm. So basically, we are seeing there is demand, and with that, a lot of projects which were, say, probably incomplete on the back of financially weak developers. Do you think these are projects which will see the light of day? Are these kind of projects also that Puravankara is looking to partner with?
So obviously, first, what we prefer would be the low-hanging fruits, which will be cleaner transactions where they have not launched the project yet, they
Mm,
have not created a customer liability, because then you have the authorities to deal with the existing customers. So
mm,
on the first line, what excites us is projects that are not yet launched. We are okay with projects which have approvals already on it. We are okay with converted lands where they don't have approvals on it. I think those will be the first ones that will probably be taken up. And then, obviously, if there are good marquee projects where they have launched, done a small percentage of sales, but the location is exciting, the value is exciting, we'll consider that as well.
right. And currently, if you have to look at the inventory as well, I think at least the top 7 cities, what I was reading is around 5.5 lakh unsold units, which are pending, and this is in the range of around, say, 1.5 crores, whereas little over 1.5 to 2.5 crore, it's another 50,000 units which are yet unsold. So in these last couple of months and probably in the next 3 to 4 months, are we trying to say that we are not going to really see a lot of new launches come up? However, it's the unsold inventory that's going to be cleared from here on.
Two important points here. I think we need to agree on a definition of unsold inventory.
Hmm.
Uh, I define unsold inventory as a product that is already built and not sold.
Correct.
Right? So I don't know what that exact number is, but in our personal experience, over the last 2 years, almost 40 to 42% of our quarterly sales have come from ready to move inventory. So today, at our group level, if you see, that number has come down by almost 70%, right? Uh,
Okay.
so the sales of so I don't believe that the good brands today have significant volumes of unsold inventory, which is apartments already built and not yet sold. In
Hmm.
terms of under construction, I don't think one should consider that as unsold inventory because it's a product that takes 4 to 5 years to build.
Built. Correct.
It's not like a motorcycle that you've bought the raw material,
Hmm.
built it in a day. It's lying in your stockyard waiting to be sold, right? So in terms of that, I think there isn't much, at least in the major cities, there isn't much built unsold inventory with the top developers. It's been experiencing steady absorption, not now, but over the last 2 years. In terms of under construction as well, I think good projects today, if you see our own project pipeline,
Hmm.
we have seen almost 65-70% of these projects being sold in the first year, within the first year itself.
Right. So with this, Ashish, overall, if you have to see between luxury or affordable housing and commercial, if we break it up into three different segments, where are you seeing higher traction? Because commercial was something because people have started working from home, that's slightly going down. But between affordable and luxury as well, where are you seeing more buyers?
So again, if I have to look at our own numbers, it's
Hmm.
almost equal. So if you again look at our quarterly numbers, it's almost 45% is contributed by Provident, which is our premium affordable housing brand, and 52% is almost contributed by Puravankara. So we are seeing equal demand across both the segments.
Okay. And clearly from here on as well, if you have to take different geographies into perspective, I mean, we know South India where you have a stronghold, but which are the other geographies where you think you want to look at, where you want to expand further? Because South India probably will be a phase of consolidation for you now. But apart from Southern India, which other geographies are you seeing good value?
So we have our focus on 5 markets, which we believe have a strong demand, will have sustainable demand over the next 4 to 5 years, which are essentially Bangalore,
Hmm.
Hyderabad, Chennai, Pune, and Mumbai.
Okay.
So these are the 5 markets we will focus on over the next 4 to 5 years. Having said that, we are evaluating a few proposals in the north. Again, our excitement to get into these markets will only be driven by projects. If you're getting a good value, they need to be large enough for us to really set an office up there. But that would be, I think, the sixth market that we'd probably explore.
Hmm. Right. So with this, if you have to talk about the launch pipeline as well, uh, where does it actually focus? Does it focus on Provident or does it focus on Puravankara from from here on?
We fortunately, when we launched Provident, it was launched as an independent sort of brand and vertical. So you
Hmm.
have independent teams working on growing their own individual businesses.
Hmm.
It's not one head who has to divide time between the two brands and say, do I do more of this or do I do
Hmm.
more of that?
Hmm.
But by nature of the product itself, the launches under Provident will be larger, right? So if you look at our launch pipeline today, about 8 out of 8.66 million square foot, a little over 2 million will be Purvankara, and the balance almost 4 odd million will be Provident. But that's just the nature of Provident projects. They're a little out of the CBD areas. They're in
Hmm.
suburban areas. They're much larger in size in terms of number of units and square footage, etc. but the focus from an organization point of view is equal on both.
Right. So when we talk about this launch pipeline as well, what's the kind of time frame that we are looking at?
So currently, the 8.66 will be launched and the 5.5 million. So if
Mm.
I total that up, about 14 million will be launched over the next 12 to 18 months. They are all lands which have already been acquired by the company. Designing is on. In some cases, approvals are in the final stages.
Right. So what's the kind of realization that we are eyeing in terms of FY21 and 22 from the launch pipeline?
So we do not set any targets.
Mm.
But in terms of, I think, the run rate from sustenance projects, if you go back into history and plot that, from sustenance projects, we do anywhere between 2.6 million to 3.2 million square foot.
Mm.
In
Mm.
that year, if you add a couple of launches, good launches, and depending on the number of launches that we can add, basis the approvals that we get on time, rare approvals that we get, that would add another 2.5, 3 million easily, depending on the number of launches that we add in that year.
Right. And overall, if you see the sales booking trend as well right now, what is that actually indicating? I mean, are we trying to get a nature that yes, people are looking to move into newer houses, but price point is still very important, or uh, the size of the house is still important?
Oh, absolutely. So I think one clear, theme that's coming out of this of COVID and
Mhm.
the lockdown is people really believing that it's important to own your own home. There cannot be a better time than now. If you look at all the factors that I mentioned earlier, which is
Mhm.
the current rates, the current ticket sizes, the interest rates right now, the few SOPs rolled out by the various state governments, there cannot be a better time, right? In
Mhm.
terms of and why move in, I think also because today people have understood that we want to move into a newer project. They offer better amenities. People from smaller homes want to move into bigger homes. People living in rental housing want to own their own home. Uh, so these are various factors that is really, is why people are taking the decision to buy now, and we're seeing the kind of sales that we are.
Right. Another aspect, Ashish, that I was looking at was the quantum of sales that are happening, purchases that are happening by NRIs. Especially, I ask you this because the dominance that you have in the Bangalore market. Are we seeing a particular trend on that front as well?
I would say it's increased a little bit, stable to increase. So, the international market would typically contribute anywhere between 15 to 20%
Hmm.
of our annual sales. I think over the last 9 months, I can say that's probably gone up by maybe 5%.
Okay. And with regards to office spaces as well, the absorption has declined in 2020. Are you expecting a pickup over there, or do you think it is time to relook at the strategy with regards to commercial real estate and probably go slightly slow versus residential?
I think it's very early to take that call.
Hmm.
Anyone giving a conclusion or a verdict on it, I think is only a guesstimate. But on the fundamental side, I think office spaces provide a fundamental platform to people to meet, to collaborate, to motivate each other, and to be productive.
Hmm.
Uh,
Hmm.
yes, in a panic situation, we humans, we adapt to anything. We're very resilient as a race. But is it sustainable over a period of time? How many people have the luxury of having a niche in their house where they can work from? How many people have, distractions? You have kids running around. You have other family in the house. Can you be as productive,
Hmm.
right? So I think time will say, if at all, the work from home, again, my guesstimate is that it'll probably be maybe 15-20% and not more than that.
Yeah.
Yes, designs will undergo a change of
Hmm.
offices. I think people from only counting desks, companies only looking at MNCs only looking at desks. There'll be more focus on internal layouts in terms of more collaborative spaces.
Hmm.
There will be flexibility added to people in terms of how many times a week you can come to office, the
Hmm.
hours of working. That flexibility will come in because of what people have experienced during COVID. But I think in terms of the demand for office,
Hmm.
would not go down more than 15-20%. And again, that's only my guesstimate.
Right. And over the last 6 months and follow up from here on, what are the price trends and realizations looking like in different regions?
So prices have started inching up again. Uh,
Okay.
November, I think most developers, including us, we took the prices up anywhere between 3 to 5%. And this was, for a couple of reasons. One is also to protect our margins. One is we also saw commodity prices, really go up.
Hmm.
Although it's we've seen this every 3 to 4 years, we see commodities, steel, cement, importantly, go up, but then they stabilize. It's very
Hmm.
short term. But to protect those margins is why most developers, including us, took the prices up. And happy to report that Jan and Feb sales have continued to be strong.
Right. And what's the quantum of price hike on an average?
3 to 5%.
Okay. And are we expecting further hikes from here on?
No, I think from here, something that is reasonable and rational, which will not affect velocity, would be more like a 3 to 5% annually.
Okay. And overall with this, another aspect is with regards to where the fundraising goes for developers. That's always been in a tough spot. But yeah, with established players, somewhere it still gets easier. How are you seeing the fundraising, happening in the real estate space right now? Are NBFCs more open to it? Or do you think there is still a lot of hindrance that comes through?
I think quality really plays a role. Uh,
Hmm.
Quality of the name, I think quality of the project that you're seeking funding for. For us, I think I'm sure you're aware. December we signed a deal, equity deal with IFC. So I think this is December and this is post-COVID. The discussion started pre-COVID, but we closed it post-COVID. So the interest is still there. Even in terms of banks and NBFCs, in terms of construction finance, yes, they did go into a deep slumber in the height of the COVID. But starting November, I think the banks are back. They are approaching us. We've closed a couple of CF transactions. So I think life is almost back to normal.
Right. And then another aspect that I do understand over here is that interest rates have gone down, right? However, if I see the cost of debt for Puravankara as well, from a 11.35, which we saw in the third quarter of FY19, it's gone up to 12. What's the reason for the cost of debt to increase?
So two things. One is it was the interest moratorium that a lot of companies took advantage of. So that interest got loaded onto this
Hmm.
quarter, and that is where you saw that number going up.
Hmm.
Secondly, the cost of debt for land funding. So that also comes at a little higher price. So
Hmm.
some land last mile funding that we needed to do to close a transaction out, etc. But for us, example, now CF is still coming at 10.5%
Hmm.
to 10.75%.
Right. So from here on, if we are at a 12% cost of debt right now in the third quarter, are you expecting a reduction to come in on that front, which would probably add
Yes,
back to your P&L?
absolutely. So I think over the next 12 months, you should see that cost come down.
Okay. And even the net debt to equity, we've seen a substantial reduction from a 1.5 to almost 1.25. Are we still looking at a further reducing that number, or is this something which we are comfortable with?
I think that number, so as our ready to move in inventory against which some of the debt sits,
Hmm.
uh, with acceleration in those sales is why you have seen our debt also come down significantly, right? I think that
Hmm.
trend will continue. Over the next year, I see debt coming down by easily by another 450 crores,
Okay.
right? Obviously, some new debt may be added in terms of construction
Absolutely.
finance,
Absolutely.
but I'm saying from the existing debt levels, we should see a reduction of a further 400 to 450 crores.
Right. And very lastly, Ashish, overall from here on, if you have to look at FY21, I'm sure we're not going to be able to come back to pre-COVID levels in terms of revenues. But if you have to look at FY20, or do you think FY21 is something which we will be able to cross in terms of, the previous years?
I think so. I'm pretty confident.
And you're saying, I mean, not only Puravankara, I'm asking for the real estate space as a whole. Do you think it's going to be like a very touch and go situation?
No, no, I think we will do better than what we did in 2019.
That's going to be good to hear. And FY22, what's the kind of growth aspect, I mean, growth numbers that you're looking at?
I think if I have to factor in the kind of launches that we have
Hmm.
lined up, I think easily you can look at about 25% over the previous year.
Perfect.
Right.
Thanks a lot, Ashish, so much for joining us on the show. Thanks for the candid conversation as well. I hope you enjoyed the discussion. Stay safe and speak to you soon again.
Thank you.
Thank you.